Hello and welcome everyone into today's session. Today I'm gonna look at some of the key names in the markets that the watch list I have made already for you guys, and then we'll also look at the SPY cues, and then we'll do a little bit of a market analysis to see where the market can go next week, and then we'll be prepared for it. So first thing first, SPY is still consolidating in this range here for almost 2 to 3 weeks now. Pricing is consolidating in this range, since 19th of September. Lead sideways action here. So what I'm looking at is, if I'm looking at from the waves perspective, prices, this type of consolidation, I don't think this is a bearish consolidation unless you get a fake out of the range. You're looking pretty bullish to me. And then we got this a downtrend breakout on SPY inside the range. Again, guys, I usually do not trust that trend line breaks, but it's good to see. It's good to have that confidence too whenever you are doing TA on any charts, right? But whenever you're trading trend lines, it's best to wait for price to break the horizontal level too and the vertical level too, right? So it's breaking this level. Now that's the first confluence. It's breaking the horizontal level, change the structure. That's your second main confluence, right? So this is something that you want to look at if you're trading trend lines. If you only solely trading trend lines, you're not gonna have a good time trading. So sideways range, and then I think this is a wave 1 right now going on. So as a wave 1, 2, wave 3, 4, and 5. 5 moves higher, and then we got this ABC consolidation on sideways. This is I'm targeting this wave 2. Now we have this wave 1, wave 2, and then wave 3 higher, 4 and 5 to the upside. I'm expecting price to break 574.40 level anytime next week or a week after, and then going higher. Looking at 2 hour from supply and demand perspective here, price made higher highs and higher lows in an hourly and 30 minutes time frame. So there's a clean demand zone formed here on SPY and hourly. So if we see a pullback next week to 568, not 568, yes, to 568 level, then I will try longs here with the target of new highs, with the stop loss at this prior lows at 565. So this is my game plan for SPY. Again, guys, if price going into the demand zone, as I told you guys, does not mean I'm going to go long right away. I'm going to go into smaller time frame. I'm going to wait for a breakout structure in, this is hourly I'm looking at. I'm probably going to go in a smaller time frame, 5-10 minutes. I'm going to wait for a breakout structure there, and then get into the longs, right? Same goes with the short side, but you'll ask me, is this a good point to go long? Definitely not, where the price closed. Because price closed above the prior swing highs, right? This is never a good idea to go long whenever price closes above the prior swing highs, because this is where the liquidity is, right? And you never want to go long when price breaks the prior swing highs. You always want to go long when price breaks the prior highs and then see a pullback. This is the yield level to go long with the targets and new highs, right? So the risk to reward level is not the best when price breaks prior swing highs or lows. So always keep that in mind before placing a trade. You will save yourself a lot of time and money, of course. All right, that was the game plan for SPY going to next week. If you just want to wait for price to break out of this range, that is totally fine too. If you don't want to trade the range, again, guys, my sizing is way less than my regular size. I'm only playing with 1/3 size as long as price in this range. Once we see a breakout, then I will go back to my full position. Next, we have Qs. Qs, kind of the same setup here as SPY. I'm watching clean demand form too on this one on an hourly time frame. This is a good demand zone that it formed, and it also broke out of the range too, closing near the resistance. A good level to go long? No, I don't think so. But on a pullback, yes. Then watching 448 level here, as long as price staying below, I'm not just in longs. I want to see a small pullback into this demand zone and then go long, or we see a break and then price moves high, right? Still in this range, so you don't want to do the guesswork here. Just wait for the price to show you what it wants to do, and then make the trade. Let's look at the waves here. 1, 2, 3, 4, and 5 moves, clean move higher, and we got this A, B, C to the downside. So looking good here. Wave 1, 2, 3 moves higher. My next target on Qs would be 500 plus for the next move higher. WM small cap index looking good since we got the news of rate cuts. The growth names and all the other names are started pumping their money's coming back into these names, because think about it, the rates are going down. Who's going to get the most benefit out of it? The companies that are not making any money, those who are company in just in starting phase, the companies that are burning cash every quarter on quarter. And if the interest rates are going down, that means the dollar's going to go down, and dollar's going to go down. That means they're going to pay less in USD, and they're going to pay pay less in interest. That means they can put more money in R&D, which means their company is going to grow, and then more it's going to attract more investors. So you want to think it this way: the small caps growth and all the high beta names. If bull flagging here, IWM looking good, but not at these levels. Right? Clean demand formed. We see a pullback into the demand. Only then we go long. Right? Pull up demand and then we go long. And this is the lows that needs to hold. 215 is the must hold level here for IWM bulls. We break that, then things are not looking good for the IWM bulls. The reason is, even though you guys see price is consolidating in this range here, a clean ABC move looks like, but price is still making lower highs and lower lows here, right? Still in this, making this lower lows and lower highs. So you want to see a clean move breakout of this level here, 221. That would confirm a clean breakout structure, and then it will be confirmed that price will break this highs, and then eventually more going to all-time highs again, right? This level. Again, guys, one quick thing. I think we are near the end of a cycle pretty soon of an uptrend. Whenever we are near the end of a cycle, we will see a huge push in the small caps, in the growth names, or in the high beta names like ARC names or IWM names. So keep an eye on these names. A lot of these names are breaking out of their bases. So in the last leg of the uptrend, we see the small caps getting pumped hard. So if you see this kind of move, I would also give you a little bit of caution that uptrend might end soon. But I don't think we know nowhere near close here, but let PA decide that. So that's the game plan for IWM. Let's look at ARC real quick. ARC was also up nice on the day here. We got this fake out of this prior lows, and then price bounced off this demand zone. Clean bounce of that demand, and then now price formed a bullish structure here, breaking above this prior highs, closed right at resistance, but a little bit higher. So it confirms the breakout structure here already. So as long as bulls are protecting this 45-50 level, so we're gonna see a new highs in price. That is going to be my target. Again, guys, this is what I said before the start of the session, is that I'm not gonna give you guys setup this week. If price breaks this, I'm gonna do this. It's just, clean risk levels. That means this demand zone is valid. If we see a pullback, and then the setup is long, it's not a short setup, it's a long setup, and price, this is going to a risk level 45. This means if you see a pullback, or even at these levels, my risk is going to be the same. Now it's up to you guys how you guys want to place that trade. You guys know your risk levels, you guys know the bias for that particular name, and you guys go ahead and definitely go ahead and place that trade. So my target is going to be this supply zone above on ARC names here, or even possibly on new highs, because we got this equal highs above here. And then most of the time price goes, if we see this equal highs, most of the time what price gonna do is price gonna go break this equal high, is gonna grab the liquidity and then possibly move lower, or candle closing above, it moves higher. So my equal highs will be my target for this ARC setup here. Dow Jones, how Dow Jones looking? Take a look. Again, guys, same setups here. So I'm only gonna focus on Y and ARC here going to next week. But you also wanna look at the same time this semis here. This is charts that you always want to look at intraday every 15-20 minutes to see how it's doing. I have semis in my list, Qs, I have ARC, banks, and then we have small caps and Dow Jones. And you can also look at energy. So these 6 or 7 names you always want to have on your charts in one of the tabs to see if market is going higher or lower in an order. So if something is not going higher, let's say there's some days only SPY and Qs goes higher, and then a semis dumping, banks and IWM dumping. At this point, you want to see the market is not moving in a coordination, and there are high chances that we can see a little bit of turbulence ahead. So it just gives you a little bit of heads up of what might come. So you always want to look at these things, and then also you always want to look at these 6 charts too. Apart from these 6 ETFs, you want to look at these 6 confluence too in the markets. I have SWIX on my charts, which shows these are short VIX futures. Basically moves the same as SPY, but sometimes it gives you that hint that where market might want to go or where the VIX might wants to go, right? And then I have a VIX chart that I always look at, and then we have a crude oil and then a dollar chart, and then yields. You always use a 10-year yields to see if yields are rising. I'm going to give you a quick example how you can use yields. So you see yields are rising and dollars rising and VIX is sideways and the market is also pumping. So at that point, you don't know who's lying, but the one thing that you know for sure that rising yields is not good for tech, rising yields is not good for small caps, and rising dollar along with the yields is also not good for small caps and tech, because the same concept, the companies will pay more interest and all that stuff. So you imply that intraday, and then most of the time price reverse. Either we see a reverse in yields and the market pumps more, and then or either yields dump, either yield stays there and then market goes down, right? So this is a thing that you have, things will come with experience. You just want to keep looking at these charts every single day, every 10 15 minutes intraday, and then you will get more hang of the charts, how this thing will work, how you can implement those charts and into your strategies using intraday. Make sense? So guys, these were some of the ETFs that I am looking at for next week. So let me know if you guys still have any questions on the ETFs, and when we can start with the names that I have for next. I think it's only 15 names or 12 names for next week, and these all setups are pretty good. You guys just go ahead and place a trade when your risk level is pretty clear. Apple is the one that I like. On our time frame, we have this small gap to fill above. That's not small, it's like 4-point gap here. And then we have this spice already tied to this zone. So Apple is a little bit lagging here. So intraday, it can give a really good long trade here as long as price is holding this demand zone, which is around 225.50. So only a 1.5 point risk here for Apple longs. We see a small pullback into this zone. Price hold this lows here, and then we can see another push higher. Price is making higher highs and higher lows, and the expectation is price continue to make this lows higher lows, and then goes into the supply zone or possibly break it too, because it's the equal highs right here in just one highs, and then third liquidity grab dump or gonna move higher. Wouldn't know that, but this is my target here at first, and then whatever happens after, we'll have another game plan for that. So that's my game plan for Apple. Go to next week, again break this lows. You guys know long's gonna stop out, and then the bear setup is in play. But for now, long's looking good. I like a firm setup here. Price came back into this daily demand zone and bouncing. This is where the price was last week, where I expected price to go into the demand zone, where I was very sure that price is going to dump, and then it did dump 8 and 9% in last week before bouncing off this demand zone. So if you played a firm, you should definitely have got 100-200% trade on this one. So the next level is, if as long as price is holding Friday lows 37 36 level, I'm expecting more pump in this name, a possible new highs too. So very small risk level here for the bulls. This demand zone holds, easy longs going forward here on this name. American Express looking pretty strong. We have this daily bull flag breakout or range breakout, whatever you want to call it, and then a very clean demand zone also formed in this name. So as long as price is holding this demand zone, the long setup is in play. If we see a small pullback, look at the daily magnets. Daily magnets are pretty far away, not a good spot to go long. Either I want to wait for a day or two to price consolidate and the magnets catch up, or for a retest of this level and before going even more higher on American Express. So really good looking long setup here. Needs to hold that 270 level. Yeah, the B is the one that I like. I think this name can actually pump. It's been price recently hit 52-week lows, and then it just been going down this whole year, almost just keep going down, and then price is consolidating sideways. This really choppy action. It's been almost a month now, so I think it's ready to move higher. Looking at daily time frame, let's look at some of the volume, high volume coming into in this consolidation. This is something that you always wanna look at. The weekly volume, guys, very high volume coming in on the weekly candles. On the monthly, we also got some high volume monthly candles. So this is something that you always want to be interested in whenever price is near the lows or is near the highs. High volume indicates accumulation and distribution. So if it's happening near the bottom, high chance it's an accumulation, but you obviously want to wait for some sort of confirmation before getting into a trade. But that is the general idea of how you can spot the bottoms, right? So high volume near the bottom, sideways consolidation. So high chances we're going to see a breakout. In the sideways, you want to wait for some sort of confirmation in smaller time frames before getting into a trade. But clean demand zone form 2 on this one, 2 hours or hourly. So if we see a pullback into this zone, this low holds, and then we can see a nice move higher on the price. I'm expecting 162 to 165 here on BA, as long as 150, 152 holds. So they're pretty big targets with a very low risk here on BA. AMD is a good looking setup, but not. I want to place long trades right at the top. Right now, let's look at hourly, how we can do that. I think only one level. Risk level is pretty good on this one. A small 168.70. We see a pullback, also a small hidden demand also formed here. Also demand right at the top. So base breakout, hourly base breakout, and then we have this small gap to fill on AMD. Guys, again, one thing that most traders, those who just started trading, they don't get the concept of how the gaps work. Most of the new traders, they think the price is in the gap. What's going to happen is going to fill the gap away. Well, my target is gap, but that's not how it works, guys. If price is in the gap, it does not mean it's going to fill the gap completely. You will see most of the time price is going to reject somewhere in the gap. Why? Because it's gonna, if there's a gap here, there's always gonna be a support and resistance if you look to the left. So in case of AMD, even though gap is at 178 where it started, but we have a resistance around 174, and then we have, this is also one resistance here around 171, right? So you always want to look for these resistance level too. If there's a gap, look a little bit more on the left side, and then mark your resistance levels accordingly, and then these will be your targets in the gap, right? So as price moving forward, easy stuff is to understand. And looking at hourly magnets, so as long as hourly magnets hold, small pullback here, and then working on filling the gap here. So that's what I'm expecting from AMD. 160.70 needs to hold. Watch 15-30 minute candle close. Cat? No, not in the same cap. Because CCL, this is not a setup for next week, but something that you keep an eye on this setup. I think I did talk about it last week too. Price is consolidating in this massive range on the monthly. I think since May or June of last year, price is consolidating in this range. So more than a year now, year and a half almost, I guess, is in this range. So if we break this highs, I think it's definitely going to go a lot higher. I'm targeting 30 on this one and 24 by end of this year or in January or February. But you want to wait for price to show you that it's 1955. The reason I think it's going to break is we got a lot of equal highs here. We got this one high, second and third, and almost fourth one here. So guys, you want to look at these resistance levels. Is the more time the resistance levels are getting tested, the higher chance it's going to break. A good example would be, think of as a cardboard box. As in a cardboard, you just keep on punching it, it's going to happen. You punching it one time, it's not going to break. Second time, it's going to be a little weaker. Fourth or fifth time, it's going to break. Same thing with the resistance or support levels. The more times they get tested, the higher the chance that they're going to break. So I think they're going to break 1955. And then we'll get a really good trade longs on this one where we see a big green days. Disney, I like Disney setup here. Disney is bouncing off daily demand zone. So as long as price is holding this demand zone, not this demand, but the low of in this demand, which is 93.18 holds, small pullback maybe early next week. And then my target is 97.60 and 98.72 is my target on Disney. I'm expecting one more highs in Disney before putting in lows here. So very small risk level here for Disney bulls. For solar, a bearish chart here, but for this one, I'm going to wait for a level break of 226. Not a confirmation yet of a breakdown, but if I look at the other names like ENPH, TAN, and Run, all the solar names, they are looking bearish. So I think solar names in general looking bearish. They want to move down, but I'm going to focus on FSLR because we have this low volume area here below 226. We break that, and then this is my target here around 208. Which is a good target for an intraday. You can easily give 200 to 400% trade on this down. Guys, gold miners, if you guys remember last week, I gave you the setup that very high chance that price is going to go down on gold miners because price formed the evening star pattern, rejecting this weekly supply zone here, and then bearish engulfing. The idea was to go short on the retracement, and that's what exactly happened. Price went higher, they went to 50 golden ratio and rejected, and now a bearish close on the week here again. Shooting star followed by another bearish candle here. So definitely not a good look. I'm expecting price to go back into this weekly demand here around 38 level. So as long as it is below Friday highs or this weekly highs here. This prior week highs is around, I guess, 40.82. Price is below 40.82. The short trade in play. I'm expecting price to go into this demand zone, fill this gap, and then possible move higher again. A little bit of turbulence coming to gold miners, in my opinion. GameStop last week, again, guys, I gave you so many setups last week and then they all worked to the T. GameStop, we identified that price is in this daily supply zone here and it closed in the daily supply zone, expected a rejection, and then we got the rejection, price made a new lows. So now what's next? I think more coming on GameStop. I think one of the easiest short setups here, and then the risk is very minimal on this one too. 2190 or 22 level holds below 22. I think we see a more dumping price back into this demand zone, which is around 1970, 1975. Right? That's a demand zone I'm expecting to tag the price and then possibly move higher or another lows. That we'll see when the price goes there. Also looking bearish. I think all the utility names are gonna see some downside next week or so. The reason is because 100% of the utility names closed above their short-term moving average, and then I think it's time to see some cool down in these names before moving higher. Cool. Daily range breakdown. As price is below 70.41, that is my risk level. Price is staying below this, and then I think we see some lows here in price, which is my target is going to be 68.81 on Coke. Nike, another bearish setup here for next week. I might play this one too because we got this on earnings. We got this gap down doji inside day, and then we got another inside day. So we got a double inside day. Yes, double inside day on Nike. So high chances we're going to see a big move in Nike pretty soon. And I think it's going to the downside because looking at these candles here, it's not looking good. Looking at hourly, not a good look. So if Monday market opens, high chance I'm going to place a short trade on Nike as long as prices, my risk level is going to be 83.70 or 84. Price stays below this, and then my short buy is in play. We have this small gap to fill here on Nike. I think it's going to fill it. 80.40, 80.50 will be my target here on Nike, and 79 and 86. So pretty good targets here for intraday levels. Can easily give a bagger or two. Shopify has very bullish looking chart here on the daily. Price is breaking above this prior highs, held it, bull flagging breakout on high volume, and we have this massive gap to fill. I think it's going to fill this gap 100%. The next supply I see is right around 90 level, and then the price is still around 82. So I think there's a lot more coming in Shopify, but it'd be good to wait for price to come back to the magnets or at least to retest of that 81 level, and my risk is going to be 77. So if you guys want to get into stocks or anything, this can also work as a good risk levels for stocks too, not just options. So we have almost 8 to 10% upside possible in Shopify. For microcomputers, I am bearish on this name. I already took a short position on this for next week. Reason is price is breaking down. Huge breakdown here of this range, retest, a shooting star, and then another bearish for Friday candle. And then also looking at hourly, we got this bear flag breakdown. The price stays below this 43 level. I think we see one more low in price, which my target is going to be these lows around 37, 33. So I think almost 8 to 10% downside. Yes, 8 to 10% downside, expecting below 43.30. Guys, let me know in the meantime if you guys have any questions on any of the setups or anything in general. I'll be happy to answer all. Snap, never mind. Snow, no. Meta, look at Meta. Let's look at Tesla on the smaller time frames. That's the same setup as SPY, and price in this daily range. So this is going to be a level to level play. We have this gap to fill above. 251 is the level I'm watching. We break and then gap fill in play for Tesla. Looking bullish on a daily time frame. I think price is going to break this highs 265, and we're going to see one more high before seeing any downside on Tesla. Needs to hold this 237. Any pullback into the demand, I'm expecting a buy. Buyers showing up, pushing the price higher to break this highs. After that, we'll have another game plan for Tesla. Meta was looking strong, very strong looking chart here. Yes, this is definitely not the top, but it'd be good if we see a pullback into this zone here somewhere, this demand, we see a pullback and then a move higher. That would also be, I think, 50 to 60% or retracement of that move that happened on Friday in the last 2 days of the week. So pull back into the zone, in this demand zone, hold that demand, which is prior highs 583, long setup in play. We'll expect one more high. This is not the top. I think this is a wave 3 is going on right now. Right, that's it. can we get more on FVG, guys? I do not trade ICT concepts, all these fancy terms I do not like. And in the end, ICT is the same as supply and demand trading. You just wait for, they also talk about breakout structure, supply and demand, liquidity, and all that stuff. So it's the same thing, but a fancy name for it. Fair value gap, guys, I have no idea what is that, right? It's just basically, I think, just the retracement levels of the prior candles. Pretty easy stuff. Just use fibs and supply and demand, equal highs and lows. They have the same concept. I did watch some of the videos back a couple of years, but then I understood that it's the same thing as supply and demand. Yes, guys, modern names to lure more people in. So guys, these are some of the names that I am going into next week, and I'm gonna be playing most of these names too. And then if any of the name changes, I will let you guys know the free ideas. I will also post all these names in the watchlist section along with the SPY analysis in the free ideas. So you guys, if you missed, those who missed, they can go look at these setups and can make your trades with the same levels and zones that I have. I will also be uploading this class to the YouTube today, so you guys can go back and watch and have the same zones and levels as me. So guys, with that, I'm gonna end the class. Hope you guys learned something new, and then good luck for the next week. I'll catch you guys in the live trading.